Hey everyone, welcome back to the channel. Today we are diving into the specific topic that's crucial for anyone looking to navigate into the financial world: making money in a down market. Do you know how to make money when the market is down? So stick around to find out more what some expert tips that I can share to help you thrive when the market is dropping. For those who don't know me, my name is Isaac Jonas. I am a trained economist academically, but I like to talk about personal finance and investing. So now let's talk about the importance of having strategies in place for making money in a down market. It is essential to be prepared for all kinds of conditions and try not to forecast the market, because the market can go in any direction at any time. So the key is to be prepared for all market conditions, including downturns. A lot of people, they are so excited when the stock market is going up, but when it drops, all hell breaks loose, and some people start to panic and to sell. So these periods of down markets, usually if it drops by 10%, it's called a market correction, and if it drops by 20%, it's a bear market. And I've seen from the data that it can drop to even 47%. Right? Those who are students of financial history, they will tell you that in 2009, when there was the global financial crisis, the market really dropped. And in those moments, that's where, if you understand what you are doing and where you are investing your money, that could be a good opportunity to also make a ton of money. So when the market is down, there are various challenges and risks, I must say, that are associated with investing or even making money. Prices for stocks or securities may be falling, and there's a sense of uncertainty that makes investors nervous, a lot of them. So in that chaos, that's where I like to thrive. So it's crucial to stay calm and focus on the strategies that that are proven and that you really understand. So for me, in that case, in a down market, I like to be diversified in my portfolio, and I'll be looking for specifically for undervalued assets, because people are just panicking. There's no rationale in them selling off, right? So there are several approaches that I can take, and I'll delve uh, into them in a minute. So now, here comes the moment. The most effective tip or strategy that you can implement to capitalize on a down market. Are you ready for it? The best approach is to adopt a long-term perspective and to avoid making hasty decisions. Decisions that are based on short-term market fluctuations. Of course, the market can go up and down in the short term, but over the long term, for most of the companies, if you look at the S&P 500, for example, but in some years, like in countries like Japan, the market has been going down for some years. So that's where the key to strategizing and planning is important. So by staying focused on your long-term financial goals, you can ride into the storm and emerge stronger on the other side. In that particular case, I only invest on fundamentally strong companies for individual companies, in addition to the exchange traded funds that I've spoken about, those that track the index funds. So mostly I understand the US and Canadian market. So I've said mostly the things that I look for individual companies are, I like to invest in individual companies that have a lot of cash. In other words, free cash flows. They have little or no debt. I prefer there are a lot of those companies that have little or no debt, that have consistently demonstrated that they have good management. They have also a moat. In other words, they have a competitive advantage, a specific niche. Companies that come to mind is, like, right now I'm recording on an iPhone, right? Apple is also another example, even though for the past several quarters, the revenue has been declining, right, for several reasons. So that makes me a little bit concerned. But there are other companies that include even Meta, Google, and I like to invest in those companies, especially when they go down like 40-50%. That's something that I look at, but only if the story has not changed fundamentally, because the market, usually there's a sell-off because there's panic, there's COVID pandemic, they missed their earnings in one quarter, right? And then investors freak out, and maybe they don't offer a guidance that is good enough. For example, Meta platforms, they their guidance was kind of lousy, and they also did spend a lot of their money in capital expenditure in the metaverse thing, and investors didn't like it. So it dropped by about 17% when they released their most recent earnings. But it has started going up. And Meta, whichever way that I look at, I use WhatsApp, I also use Facebook for my business as well, even communicating with friends. So these are the services that I actually, look at. I'm recording and I'm using this microphone that I'm using. I bought it on Amazon. So these are the things that I look at, and they have a ton of cash, right? So the cash would enable them to write off even if there's a harsh macroeconomic environment. So that's a strategy that I use. But also in a down market, I like I've said in other videos, to have some cash. I want to have some money in the equities market. Let's say 60%, 20% or more will be in cash, just sitting in a high yielding savings account, for example. Or maybe I like to have like exchange traded funds that track the volatility index. Like when the market becomes volatile, they started to go up. I have several that I've been looking at, including UVIX. That is the ticker name for that. Is just an example. It's not investment advice. But also even buying gold exchange traded funds like GLD that have been consistently retaining very good returns. So in a down market, for me, I see it as an opportunity to buy good quality securities at very discounted prices. And also, I like to have a part of my portfolio in bonds, right? So because historically, bonds usually they've been shown to go up in opposite direction, should I say, with equities. So it's kind of a short position in a way that the market doesn't always go up all the time. Sometimes it drops, even like I said, 10, 20%, 40, 50%. For me as a long-term focused investor, I will be celebrating, because then I would be buying wonderful companies at a huge discount. So some people, they like to say they do options. I mean, for me, options are very risky because they are leveraged. Some people, they find them profitable, but I avoid using them for the long term. I just trade them on my day trading occasionally. Actually, it's regularly. So in conclusion, it is essential to be prepared for the market fluctuations, because the market doesn't go on a straight line. So if I am a long-term focused investor, that means I would be prepared for all the circumstances. And of course, still there would be surprises. But if I have some money that is invested, let's say for 50, 60% of the money in the market, I have some cash, I have some money that is in treasury bills. I was at the Berkshire Hathaway on May 4th, where I had the chance to interact with Warren Buffett, and the vice president Abel, what he said is that the reason why they have so much cash, like almost 170, over 180 actually billion in cash, is that they want to protect investors capital, because sometimes if they put in treasury bills, they're getting 5-6% inflation. In the US is it's over 3.48, about 3.48%. In Canada it's 3%. So they are still getting a good return. But the good thing is, now if the market drops and you have that amount of money, you can make a fortune, because a lot of wonderful companies, they will be discounted, including even the S&P 500. So that's when most of the money is made. Most of the money, what I've learned is that it's made in waiting. Just waiting. You have some money that is in the market, but you have cash that is there, and that's something that I am learning. So it is key to stay informed, to stay patient, stay focused on your long-term objectives. By following these expert tips, you can successfully build a very successful portfolio, at least from my experience. But before we wrap up, don't forget to subscribe to this channel so that you get some insights when I post the other videos. And also, I'd love to hear from you. Share your experiences and the strategy of making money in the down market on the comments below. Let's learn from each other and grow together. Thanks for watching, and see you in the next video.